All right, we are back with another episode of the Real Estate Investing Club. Today we have Terrie Schaeur with us. Terrie is from the Mindful Landlord book. She is a property management pro, and we are just talking about how we both love jiu-jitsu. But we're here to talk about real estate. Terrie, I am super excited to have you on. Thank you for hopping on.
Thank you.
Absolutely. I told you before we got on here, we like to start with stories. We like to hear how people got to where they are today. So why don't you take us back to the beginning? How'd you get started in real estate?
Sure. So it's a great story. I moved away to college when I was 19 and out of my parents' house and into this very poorly managed student house. Like there was no space in the dorms. So I ended up living in this like co-op house that was just really not managed. I can't even say badly managed. And the first thing I did was pick up the garbage. And the next day, my housemates voted me house manager. So
Just from picking up the garbage, that's all it takes.
yeah, like I like, and this is like, I feel is like one of the qualities a property manager needs to have is like, you just take ownership of problems, right? Like you walk in, see something, okay, this is not to my liking. I'm going to fix it and then worry about who's responsible after.
Yep. Yep.
um,
I love it.
so that's kind of how I got started. And then I moved around a bit and started house hacking before purchasing a property, before house hacking was cool. So I then actually moved to Vancouver. So I've been now to Seattle a couple
All
times.
right.
Um, and like rented a big house there because I was still studying and I was like, okay, I like this, managing student housing thing. So let me rent a big house and like rent out the other rooms and, diminish my cost of living like that.
Oh, you were really house hacking. You didn't buy the house. You sublet the
No.
house that you rented. Wow, I
Yeah.
love that.
Yeah. I think I was like 24 when I moved out there, and like the idea of buying a property was a bit too daunting. And so I was like, okay, like let me just rent it. And it wasn't even really on my radar that like you could do that
I
until I
think
moved.
I think
Yeah.
that is the most underrated strategy when it comes to real estate investing is, and this is, we're me and my girlfriend are pregnant right now, and I'm going to tell my daughter to do this, like house hack, go get a lease and rent it out to other people when you're in college. It's genius. It teaches you how to do real estate. You don't have to buy the property, and so it's a good idea. Sorry, I jumped into your story. Keep going.
Yeah. No. So then that, I already, by the time I decided that I wanted to start investing, like I, read Rich Dad, Poor Dad, and I was about halfway through a PhD. And I moved back to Montreal, which is where I'm from initially, and went to see Dad. And I was like, Dad, look, I've been managing properties for 6 years, right? Like it wasn't a plan, but like that was what I'd been doing. And I'm like, look, I really think it's time to do this for money. So let's buy a building and I'm going to do the same thing. And, I also
You already had the proof of
really,
concept. You're like, come on, we got this, no
yeah.
problem.
And I picked the worst part of town at the time. And Dad was like, what are you doing? And I was like, no, trust me, it's going to work. And it did. I mean, it also happened that like that part of town is like really, Canada's not dangerous, so it's not like anybody has guns. It's not like you're risking your safety. It's just not aesthetic, and there's like a lot of, social assistance, a lot of like drugs, but it's not anything that's going to be a personal risk. It's more that just you're going to come home and like people are drinking on the stoop and like
Right. Yeah.
you know
You don't have to worry about
um
bullets flying. You just have to
yeah,
worry about
absolutely,
something
yeah.
that's not appeasing.
And so like basically I rented the place out to foreign students. And so
Okay.
those people didn't really know that this was a bad area. So I was able to like command almost double the rent. And while at the same time provide a service where like the students were just really happy to have this kind of a community that they could land into.
Nice.
Um,
And this is a multifamily that you bought?
yeah, it was a triplex.
Oh, triplex. Okay, cool.
Yeah. And then that went so well that I ended up with another house, like we're at another triplex and another triplex. And then we ran out of borrowing capacity and kind of got tapped out at 9 doors. And I was like, but this model still has legs.
Right.
Let
But we
me
can still do
become,
this.
yeah, let me become a property manager and let me sell my business model to other people in the area who want to make more money and want to have a better kind of tenant. And so that's what I did. I just, went through back then it was like we had Kijiji, which is like kind of like your Craigslist. And like I just went through the rental ads in there and was like, hey, want to make more money? Let me
I
rent your
love it.
unit.
That's a good way to
um,
go for, I mean, if
yeah.
you have a property management company and your clients will be other investors. And so Where's the best place to find investors? Listings of investment properties. That makes a lot of sense.
Yeah. And so then I did that and kind of grew a property management company that focused on those kind of student rentals. And I did that for quite some years until the market here shifted. And basically, one no longer had to do that kind of rental in order to command that kind of rent. So, then I slowly like got out of basically kept the management units, but just got into like more standard rentals, like renting the whole unit.
Okay.
Um, and then I learned, actually, I became involved with what's called the Real Estate Investors Club up here.
Oh man, you're
Yeah.
trying to steal my name.
I actually honestly like when I looked at the podcast name, I was like, is he on my show or am I on his show? Because my podcast is the Real Estate Investors Club podcast.
I love it. Hey, we know how to pick good names. That's all that
Yeah.
that says.
And so like getting involved with basically what is it like real estate education thing, they hired me to teach property management. But when I
Okay.
got in there to teach property management, then all of a sudden I'm like, oh, look, this is how you build joint ventures. This is how
Mm,
you set up financing. This is how you do all these things. And then like my investing just kind of went poof after being in contact with the other coaches there who basically showed me like how to scale my business. And then now I do still manage and I self-manage some of my properties, but like my main hat is that of an investor now and not so much of a property manager.
nice. I love it. And I love to hear that trajectory because it's not one that a lot of people take. Most people, when they get into investing, they start as the investor. They're looking for properties, they're looking for deals, and then they hire third party property managers. But you started as the property manager. And I feel like that is such a good base to have because that teaches you how to underwrite deals better. If all of the little nitty gritty operational costs that you're going to be running into when you're managing your properties, that really does help with underwriting. So sounds like you had a really good base to start from. How did you make that transition, from your property management hat to now I'm looking for deals? So are you sourcing the deals yourself, or how'd you make that transition into the investment side of the business?
Well, it was actually really funny. Like, I actually had a fight with one of my clients. So I was managing a sixplex of his, and like I managed the hell out of it. Like I made him a lot of money. Like I optimized the whole thing, and I think on percentage wise, he was paying me $300 a month.
Oh, wow. That's
And
nothing.
no else, I mean, that's the Canadian rates. That's what it is. But like and he was reluctant to pay me that money. Like there was an extra charge where like I put, I don't know, whatever, $100 garbage bins on there. And I had the contractor bring the bins out to the property because he almost got a ticket for the tenants leaving garbage out. Um, and like he had a fight with me over that. And then I was
Oh,
like,
geez.
wait a second, like let me just calculate over the last 2 years how much money I made you in optimizing this building. And like I realized that I made him 300K.
Yeah.
And I'm like, what am I doing? Like, this just makes no sense. And so, like, basically, I called him back and was like, okay, I'm done.
Yeah.
And then I was like, okay, now I'm not taking on any more management clients unless this is somehow a door into eventually partnering with them.
Mm.
Um, and then that really, like, I would say for me, finding deals, like the bottleneck on what I'm doing is not so much finding deals. I have like, some people who bring me off markets. I have my broker's license myself. It's more a question of the rate at which my partners are willing to go in on stuff. And I'm pretty conservative in terms of people that I want to invest with, just because I've had early on in my career, I had like a partnership go the wrong way. And
Mm.
so now like I'm, financially I'm comfortable. And so like in order for me to do anything else, it has to be where I actually have pleasure doing the business, not because I want to bite off the next huge chunk. So that's where the mindfulness comes in.
Yeah, yeah, and that is a good place to be because at the beginning of anybody's career, I feel, especially for me, I wanted to get things done, and so I if I felt like it wasn't the best fit for personality or whatever, I was just like, whatever, I need to get this deal done. We're going forward. But once you start to really develop yourself, in your career, you start to realize like those things matter. Having a good partnership where you can trust each other matters quite a bit. So it's good to hear you made that transition. When you said now you're looking for partners, you're looking to partner with, owners of properties. What does that look like on a practical level? Are you partnering as in they're bringing in the capital, they're finding the deal, bringing the capital, and you're managing, and then you guys do an equity split, or how does that generally look for you?
Well, I'm the optimizer, and
Okay.
usually I'm the one who finds the deal. Like I'm the boots on the ground, ear to the ground kind of person, and like my partners tend to be people who have capital to invest, but don't have the time to find the deal and then like look after the fact that it's getting optimized. So that's kind of my niche, and I like most of my deals are in kind of low income areas. So it's also because I know those areas super well. It allows me to be very selective of like, okay, this street is a good idea, this specific neighborhood is a good idea, but like that, it's still too sketchy. So,
Okay. Yeah, that makes sense. So let's go a little bit farther into like the nitty gritty of management. And I kind of want to focus in on, you already mentioned low income is kind of your niche there. And that's something that a lot of people shy away from. There is obviously great deals in any metro, or if it's a metro that's growing, there's going to be good deals no matter the socioeconomic area of that metro that you're investing in. So I guess when you are identifying a property in a low income area that can be a good deal, what are the red flags and the green flags that you look for to let you know that this is going to be a good investment, even though it's in a bad area?
well, so I mean, because my strength is property management, I look for buildings that are poorly managed,
Okay.
and so that could be tenants
So
not
you look at their
paying.
P&Ls and you're like, where are you spending too much? Are you're spending $3,000 a month on garbage? Why are you doing that? That kind of thing.
No, it's more the tenants.
Oh,
Because so
okay.
like we have very strong rent control here.
Mm,
And so it's to look at, okay, like they're okay, so the building has low rents. Like very typically, when the owners don't have any more strategies to optimize, then they look to liquidate, right?
mm,
And so like you're gonna see a building that's sold like way below what its normal value should be because the multiples of revenue are so low because the revenue is so low. And
okay.
then I want to go into the building and I want to be like, okay, like what's the deal with these tenants? Like if the building is poorly managed and that there, there's a lot of drugs, there's a lot of people who are not paying, there's like a lot of that kind of situation, I know that I can come in and clean it up and optimize the rents by cleaning up the building. What might be less of a good opportunity for me is like if it's, let's say, a bunch of senior citizens, like because like rent control is very strong when you've had people who are in units for 25 years, but the building is like super quiet and stable.
Mm.
There's kind of no way to turn those units over without kind of strong arming people, and like that's not my business model. Like I want to up the standard of management, give the remaining residents a better quality of life, and get rid of people who are not behaving properly, but I don't want to put grandma and grandpa out on the street. So
Yeah, absolutely. And I feel like that's a good mentality to go into any property that you're managing, regardless if it's multifamily or commercial or anything like that. You mentioned rent control. I'm curious. This is more just out of my own curiosity. What does it look like up there in Canada for rent control? Like, what is can you guys only increase rent by 20%? In the year, or what
that's
does it look like?
that's cute. Okay, so so the government basically puts out a base calculation every year that we have to adhere to. This year was 2.9%.
Wow. And that's even
And
if like so if this person has been at your property for 25 years, they started and they're renting at 500, now market rents are 2000, they can only go 2 point whatever percent from 500.
2.9%. Yeah.
Wow,
Yeah.
that's crazy.
Yeah.
Okay.
And we have, it's like, it's even more communist than that. Like there's a government spreadsheet, and basically like you have to input all your building expenses and the government spreadsheet shoots you a number at the end. And that's the amount you're allowed to increase your rent by. So like the, basic coefficient is 2.9, but like once you put your expenses in, it might end up being 3.5. And then you send your tenant the calculation and their increase letter, and then the tenant can refuse it. And if they
Oh geez.
refuse it, then you have to go to court in order to prove the amount that you requested. And so that's our, and between units you're not supposed to increase your rent. Like when a tenant leaves, you're supposed to respect the 2.9%. There's workarounds, but like that's the law.
Wait, wow, I did
Yeah,
not
yeah,
know that. So if I mean that
yeah.
is generally a way to increase rents and to get around those type of rent controls to get rent up to market is by having a tenant leave and then just making the new street rate the market rate. And so you guys can't do that. You're if it's 500 from this lady who's been there for 25 years, it has to be 500 for the next person.
Technically, I mean, there's workarounds, and that's kind of my job. But if the new tenant gets a hold of the old lease, and we have to actually write the old amount on the new lease. And so like if they get a hold of the old lease, they're going to take you to court and you're going to end up fixing the rent at $505. So
Wow, that is
yeah.
crazy.
It's
Huh.
crazy.
Well, yeah, I guess I live in Seattle and we have pretty when it comes to America, we have pretty strong tenant friendly laws. But I don't think it's as bad as that. So that is definitely interesting, and you learn something new every day. So I guess I don't want to get stuck on that topic because there's so many other things to go into. But you're really curious now how you go about underwriting properties when you're looking at if everything is under market rents, then you can't really put in your pro forma like we're going to be able to hit market rates by X, year 3, year 4, whatever. You basically have to stick with what's already there, and so there aren't really a lot of opportunities to increase your revenue.
Well, this is where the bad tenants come in, right? Because
Okay.
like when tenants turn over, like we have workarounds to increase the market. So like there's like kind of manipulations you have to do, but like there's a way to do it. And so like when I go in and do my visit of the area of the units, I have to be like, okay, what are my chances? Like what percentage of people do I think are going to leave in the next 2 years? And like usually I run my optimized plan over a 2 year period. And then sometimes you get lucky and like a few more people leave or something happens. But like I can get a feel by now how precarious people's tenure is in the place, and then that becomes something that you build into the financial model.
Gotcha. Yep, that makes sense. One thing I always like to ask property managers or people who were property managers and other investors about their properties is what improvements that they see uh, allow them to increase the rent the most when they purchase a property. So when you're buying a property of all this capex that you need to do to the property, what are the things that you generally see give you the highest return on your investment when you finally buy it and do your capex improvements?
Yeah, I mean, the areas that we work in, really, like and I'm not a construction person, so somebody else might give you a different answer. But like for us, it's really kind of lipstick. Like we'll repaint, we'll like redo the kitchen, like paint the cabinets, kind of thing. But the thing is, if at a certain area, like the market rent is $900, if you put a gold toilet in there, it's not going to get you
It's not
950.
going, yeah,
Yeah, and I tell that, I tell that to like some of the people that I coach now who own property, and rents are so market sensitive here that like there's no point overdoing the upgrades. And like, it's also our market here. Like I feel like Montreal is not a very rich city. And so it means that like people are blocked by what their income is. And
yeah.
so they're just not going to pay for anything more. So you might as well just give them a Toyota. And anyways, there's not that many Toyotas on the market. There's not enough affordable housing here, just like everywhere else. So give them something clean and minimalist, and don't add. Sometimes people want to like add Wi-Fi or add all these other things, but like in my market, it doesn't make sense. That's not to say you can't do those value adds somewhere else, but get rid of the bugs and paint the kitchen.
Yeah, absolutely. You need to be cognizant of the market that you're investing in. And it sounds like you are a master of Montreal, so you know your market well. I just took a peek at the clock. It looks like we're running it down. Before we jump into the quick question though, I wanted to ask about your book, Mindful Landlord. What is it? What can people expect? Where can they find it?
Okay, so it's available on Amazon. I'll try to do the really quick elevator pitch. So, half of it is my management strategies. So basically, like everything we talked about in the interview up to now. The other half is a mental training program. And, so much of what we do in life is up here. And I like to use the parallel of diet, right? Like we all know what we have to put in our mouth to lose the 10 pounds, but whether or not we do it depends on what's going on up here. And real estate is no different. You really need to have a solid mindset if you're going to achieve your goals. And I feel like there's not enough of that in real estate investing. And like, I also just want to take a quick minute to delineate the difference between mindset and mindfulness. Like, I feel like there's a lot of people who are like mindset, my positive affirmations, but like, that's not what I'm talking about. I'm talking about like actually understanding how your consciousness operates. So the difference between thoughts, emotions, and presence, learning to navigate between those three levels in such a way that your thoughts are not sabotaging you, your emotions are not sabotaging you, and your decision making is really coming from the right place. So it's difficult to explain that in 30 seconds, but like that's kind of where it's going.
Nice. I love it. That's one of my favorite topics. Sounds like a book I would enjoy, and they can find it on Amazon. Just search Mindful Landlord, correct?
Yeah.
Awesome. I love it. All right. With that, we're going to move us to the quick question round. Are you ready?
Go for it.
Let's do it. Starts with books or any form of education. Give me two recommendations, one for general life wisdom, one for real estate specific.
Sure. Well, I mean, I'm going to recommend my own book, obviously.
Absolutely.
Mindful Landlord.
Of course.
General life wisdom. So what sent me on the mindfulness path was Way of the Peaceful Warrior by Dan Millman.
Great book. Great book.
And if you know, it is what to mindfulness, what Rich Dad Poor Dad is to real estate. So if you haven't read that book, by all means do. It's going to change your perspective on things.
Yeah, that is a great book. It was one of the first kind of mindful books that I read. But actually, the Audible for Way of the Peaceful Warrior is really well done. So if you guys aren't really into reading, either way, you should read that book. But you can check out the Audible because they actually do a really good job with that. And generally, I don't like listening to books, but they did a good one with that. So all right, moving on to the next question. And this is for your younger self. So let's go back to the Terrie who had no experience in real estate. She was just going, she was picking up that first piece of garbage at her student housing way back when. Go to her, look her in the eye, give her one piece of advice moving forward.
So realize that your network is going to grow with you. And I think this for me, like, and other people who start out when they're really young, it's very difficult because your friends don't have money. Your friends are not into the same stuff as you. And so whereas older investors might be able to tap into the, their network that has retirement money saved, capital, it's a real uphill battle when you're 22 years old and you're trying to buy a property or raise capital or like appear credible, because like I had to try to appear credible as a property manager. And so it's that time is on your side. Don't give up because you have a young face, and just trust that by the time you're 30, you're going to be like way ahead of everybody else.
That is great advice. Your network grows with you. And that's something that I've noticed. I'm 36 now, and I've noticed that over the last 10 years, even. It's just, we were all poor in our early 20s, but as time goes on, we all start to have money. And so you don't really realize that when you're just starting out. Moves us to the next question, and this is about your business. Our businesses live and die based on the people who are working in them. And so we're not talking about specific people, but I do want to know the first three positions you hired for, and would you hire them in any other order if you started again today?
So probably not. So I hired first a rental agent, an admin assistant, and a bookkeeper.
Mm-hmm.
And I would probably do the same thing based on the way my business is now. I think probably I would have gone with the admin and the bookkeeper first and the rental agent after, but those were necessary. And if I can say a word also in terms of everything that's available now with virtual assistants, you don't have to wait to have a full position to hire. Like it's so easy now to hire a part-time bookkeeper, to hire a part-time admin assistant. There's really no excuse to not fill those 10 hours a week if that's all you had, because there's going to be a VA who's going to be willing to do it for you. So
Yep, absolutely. That is I feel like a VA is something that I would definitely recommend just somebody just starting out. That should be their first role, because you can get a VA, just like you said, for a couple hours a week, and they are going to help you more than you think. And that moves us to the next question. I know you are a single metro gal, but this question is about, usually I say the US, but we're going to say the world right now. There's a lot of metros out there, a lot of opportunities to invest. So, what is one metro that's not your backyard that you are most excited about investing in today?
So it's actually a good question. I'm investing in a place an hour and a half out of Montreal called Trois Rivières, or Three Rivers. It's kind of like a working class town that has had a good COVID. And I can say, a word to your US audience, we didn't have 2008, and Canada right now is going through the correction that you guys had.
Oh, interesting.
Yeah. And so if you're looking for opportunities north of the border in the next, 6 months to a year, there's going to be some, I think, really good opportunities because, we've been following the same interest increase cycles as you guys have, but Canada is one of the top three overvalued real estate markets, or it was up until about a year ago. So there's going to be some good deals to pick up here.
I did not know Canada escaped the 2008
Yeah.
meltdown there. That's pretty
Yeah.
interesting. Huh. All right, moving us on, and this is about finding good deals. That is how every real estate transaction starts, is the actual property itself. So, what's your favorite way to find good deals?
Well, so I have a broker's license, so like I most of my stuff comes off the MLS. I know it's boring. But because I have the business model of working in areas that a lot of people don't want to touch, that's worked for me. I do also have I don't know if you guys have the same word, like bird dogs. So
Oh
like
yeah.
people who are out there looking for deals, and because they know the kind of properties that I'm interested in, they'll bring me a deal and then they take a small percentage to bring me off markets. And that's really what I do. I don't have a farming system. And I think in terms of your business model and picking the things that you're good at, like for me, I don't want to start a prospecting team. Like that's not what my business is about. My business is about managing poorly managed properties and bringing them up to a good standard. And so I don't want to dilute myself with deal flow, trying to be the deal flow myself. So yeah.
Yep. Makes sense. You focus in on what you're good at. And that leads us to the next question. And this is about mentors. None of us are islands. We all stand on the shoulders of giants. So, who is one mentor who has contributed significantly to your career today?
Wow. I mean, if anything, I think I could just make a call to action that people should have more mentors, because I think I'm like very self-taught. And I feel like if I had been a bit less self-taught, I think things would have gone faster for me. Obviously, like I really value the investor community around me at this point, so who are kind of colleagues at this point. But I can't really say that I had a mentor. And I guess if I could go back, that would be another piece of advice I would give my younger self, is to surround yourself with people whose shoulders are a bit higher than yours, because it's going to help you go a lot faster.
Yep, absolutely. All right, that leads us to the very last question. This is for the listeners. You've given us a lot of good advice. I'm sure people want to reach out and learn a little bit more about your book, about what you're doing up there in Montreal. So, why don't you give us the best way for people to reach out and get in contact with you?
Sure. So I'm with my name. I'm pretty much available on most social media. So Facebook, Instagram, LinkedIn. LinkedIn is probably my favorite. Otherwise, you can go on the mindfullandlord.com website, pick up the book on Amazon. So that's really where to find me.
Perfect. Mindfullandlord.com and then Terrie Schaeur, TerrieSchaeur.com. I will put those links in the show notes. So if y'all want to reach out to Terrie, just click a little more in the description. It'll pull down the full description, and in there you can find Terrie's URL. All right. Well, Terrie, that wraps it up. Thank you very much for hopping on the show.
Thank you for having me on.
Absolutely. And for everybody who's here with us today, thank you guys for showing up. You are the reason we do this. So if you guys have any questions whatsoever, reach out to me, Gabe at the realestateinvestingclub.com. And if you guys want to support the show, all we ask is you give us a thumbs up, a like, a share, all that jazz. That's all we really need here. Other than that, I hope you have an absolutely fantastic week. Keep rocking real estate, and I look forward to seeing you on the next episode.